If you are 65 or older and you own your home, there is a strong chance you are paying more in property tax this year than you are legally required to. Not because you did anything wrong, because nobody told you the program exists. According to AARP, only about 8% of the more than 9 million seniors eligible for property tax relief in this country actually apply for it. 92% of eligible people are leaving money on the table every single year, in some cases thousands of dollars a year, because these programs are not automatic, and almost nobody proactively tells you they are there. At least 39 states, plus Washington, D.C., offer some form of property tax relief specifically for homeowners 65 and older. Exemptions that shrink your taxable value, freezes that lock your assessment in place even as your neighborhood's home values climb, credits that refund part of what you already paid, deferral programs that let you postpone payment entirely until the home is eventually sold. I want to be straight with you about something before we go further, because I am not interested in overselling this. These programs do not make your property tax bill disappear for most people. What they do is meaningfully shrink it, sometimes by a little, sometimes by thousands of dollars a year, and in a small number of specific situations, primarily very low-income seniors in certain states, they can eliminate the bill almost entirely. I am going to walk you through how these programs actually work, what the major types are, specific numbers from real states so you understand the scale we are talking about, and exactly what you need to do this year to find out what you qualify for. Because the deadlines for most of these programs are early in the year, and missing the window in many states means waiting an entire extra year to claim what was already yours. Let me start with why this matters more right now than it has in years. Home values across the country have climbed to historic highs. The median home price in the United States has pushed well past $400,000, and in a lot of markets, assessed values have followed right along with it. When your home's assessed value goes up, your property tax bill typically goes up with it, often by 10 to 20% in a single reassessment cycle in some areas. Meanwhile, Social Security's cost of living adjustment for 2026 came in at a fraction of that, enough to barely keep pace with groceries, not enough to absorb a property tax bill that jumped by double digits. That gap, rising home values against a fixed and slow-growing retirement income, is exactly the problem these state programs were built to address. The state legislatures that created them understood that a retiree on a fixed income can become house rich and cash poor very quickly when property taxes climb faster than their income does. There are four main types of relief, and understanding the difference matters because most states actually offer more than one, and you can often combine them. The first and most common is a homestead exemption specifically for seniors. This subtracts a fixed dollar amount, or sometimes a percentage, from your home's assessed value before the tax rate is even applied. You still pay tax, you just pay it on a smaller number. Texas is a strong example of how significant this can get. Following constitutional amendments Texas voters approved in late 2025, a qualifying senior homeowner in Texas can now shield up to $200,000 of their home's value from school district taxes. That breaks down into a $140,000 general homestead exemption that any homeowner gets, plus an additional $60,000 senior add-on specifically for people 65 and older. On top of that, many local taxing units layer on their own additional senior exemptions, and Texas also has what is called an over 65 school tax ceiling, which freezes the actual dollar amount of your school tax bill, not just the assessed value, as long as you continue to own and live in the home. New York has a similarly significant program called Enhanced Star. For homeowners 65 and older with income below approximately $110,750 in 2026, Enhanced Star provides a $70,700 reduction in your school assessed value, more than double the basic Star exemption available to younger homeowners. Depending on your specific school district's tax rate, that typically translates to somewhere between $1,500 and $3,500 in actual annual savings. South Carolina offers an additional $50,000 exemption on top of its regular homestead exemption for seniors, bringing the total shielded value to $100,000. Florida allows low-income seniors, generally those with income below roughly $35,000, to qualify for an additional homestead exemption of up to $50,000, and some counties add an additional exemption for seniors who have lived in their home for 25 years or more. The second major type is an assessment freeze. Instead of reducing your taxable value, a freeze locks your assessed value in place at the level it was when you qualified. So even if your neighborhood's home values keep climbing, your taxable assessment does not climb with it. Arizona's Senior Value Protection Program freezes your assessed value for 3 years at a time for qualifying seniors 65 and older who meet income limits and have owned their home for at least 3 years. Cook County, Illinois runs a senior freeze program that locks in your equalized assessed value if your household income is under $75,000. New Jersey's senior freeze program works a bit differently. It actually reimburses you for any property tax increase above your base year amount, which makes it especially valuable for long-term homeowners who have lived in the same place for many years while values climbed around them. The third type is a circuit breaker credit. This one works differently from the first two. Instead of adjusting your assessed value, it acts like a safety valve directly tied to your income. If your property tax bill exceeds a certain percentage of your annual income, the state refunds you the difference. Pennsylvania's program is a particularly important one to know about because, unlike most senior property tax programs, renters can qualify too, not just homeowners. The 2026 standard rebates under Pennsylvania's program run $1,000, $770, $460, or $380 depending on your income level, and the program is funded through online filing via MyPath or the paper PA 1000 form, with a deadline of June 30th for the prior claim year. The fourth type is a deferral. Several states allow qualifying seniors to postpone paying property taxes altogether, with the deferred amount plus modest interest, typically around 5% simple interest in programs like Washington State's, becoming due only when the home is eventually sold or transferred. This is not free money. It is a loan against your home's equity, in effect, but for a senior on a genuinely tight fixed income who needs to stay in their home today, it is a real and legitimate tool worth understanding. Now, here is the part that should genuinely frustrate you, and the entire reason I am making this video. None of these programs are automatic, not one of them. Your county assessor's office does not look at your birth date on file and quietly start applying a senior exemption. You have to know the program exists, and you have to file the application yourself, typically during a specific and fairly narrow window. Most states require you to file in the year you first qualify, generally sometime between January 1st and April 1st of the year you turn 65, though this varies meaningfully by state. Arizona's deadline for its valuation freeze application is September 1st. Washington requires homestead and senior exemption paperwork filed with the county by March 1st. Texas is unusually generous here, allowing an age 65 exemption to be filed up to 2 years after the date you first qualified, which means if you missed it, you may still have time to claim it retroactively for those specific years. Most states are not that forgiving. Miss the window, and in many cases you forfeit that exemption for the entire tax year with no retroactive recovery. This is a genuinely use it or lose it system. Every single year you do not file, if you are eligible, is real money that simply stays with the state instead of staying with you. Here is exactly what to do this week. Go to your county assessor's website or your state's Department of Revenue website and search specifically for Senior Property Tax Exemption or Senior Homestead Exemption for your state and county. Almost every county now has a dedicated page listing every exemption available, including homestead, senior, veteran, and disability programs, because many of these can be combined. When you find the program, check 3 things specifically. The age threshold, which is usually 65, but in some states like Washington, the qualifying age can be as low as 61. The income limit, if there is one, since several of the larger dollar programs like New York's Enhanced Star and New Jersey's Senior Freeze are income capped. And the filing deadline, because as you just heard, these vary enormously by state, and missing them is the single most common reason eligible seniors never receive a benefit they qualified for. Gather your documentation ahead of time. You will typically need proof of your age, proof that the home is your primary residence, such as your deed, your most recent income documentation, including Social Security statements if the program is income-based, and a valid form of identification. If you are a caregiver helping a parent navigate this, Pennsylvania's renter-inclusive program is worth checking first if your parent rents rather than owns, since most senior property tax programs exclude renters entirely, and Pennsylvania's does not. And here is something worth doing regardless of which exemption you qualify for. Apply for every exemption you are eligible for first, and then separately consider whether your home's assessed value itself is fair by appealing it if you believe it is too high. The exemption reduces what you owe. The appeal makes sure the underlying number you are being taxed on is accurate in the first place. Those are two different tools, and using both together produces the largest possible reduction. Every state's specific numbers, income limits, and deadlines I gave you today reflect 2026 figures, but these programs are adjusted by state legislatures regularly, sometimes annually. Always confirm the current details directly with your county assessor or State Department of Revenue before filing, because the exact dollar amounts and income thresholds you see online can shift from year to year. This is not legal or tax advice specific to your situation. It is a starting point to make sure you know these programs exist, since most coverage of property taxes never mentions them at all. If you are 65 or older and own your home, the odds are genuinely strong that there is real money sitting unclaimed with your name on it right now in a county office that will not call you about it. 92% of eligible seniors are not claiming what they are entitled to, simply because nobody told them to look. Now you know to look. Share this with someone you love who is 65 or older, a parent, a grandparent, a neighbor. This is the kind of information that pays for itself the very first time someone acts on it. Subscribe and turn on notifications because state legislatures update these programs constantly, and I will keep you informed about new exemptions, expanded benefits, and changing deadlines as they happen. Drop a comment and tell me your state. I want to know how many people watching this had no idea their state even had a program like this before today. I will see you in the next one.